Hi guys, welcome. I think it's finally time for a Bitcoin video, and finally time to be interested in Bitcoin too. In my opinion, just from a sort of technical point of view and ultimately risk to reward point of view, right? It's been a sort of while now since I last posted the the other Bitcoin video, which has been a good few months now. Um, and nothing has changed from that last video. It's just that technically we're in a really interesting spot, and in the last video I did mention, and I mentioned quite a bit in the Discord or on Twitter, that ultimately I think a bid under 60,000. I think that's always a bid. I am ultimately still looking towards sort of 40,000 at its very lowest, but I really think the opportunity is there right now. So sort of a continuation from that last video, and I'm very much averaging into Bitcoin. Whenever we dip into sort of that below 60,000, I think that's a great buy. And as I said, if we do sort of get really cheeky with 40,000s, lower 50,000s, and I think that's a no brainer, right? Now I would like to see sort of another flush, another flush in Bitcoin. Obviously, right now with sort of this structure that we're kind of looking at, and I don't want to repeat a lot of things that I've already gone through before in previous videos through all throughout last year, 2025 and onwards, because we did, as I said, we did get this move, and we did call this around 125, 126k, with the minimum top being 117k. Now what we're seeing unfold now is, of course, sort of this, we've got this, let's get this over here. We've got this one leg, okay, a little bit of a retracement there, okay, second leg down, another retracement here, and sort of this fourth leg, okay, where ultimately, what we've done is we've taken the low over here, right? What we've not done is sort of, let's say, flush this low and then significantly broke structure and continued in this downtrend, right? Of course, that's what we did do over here, right? And this is kind of the things that we wanted to, sort of be looking for. And when we had this initial first leg down and retracement, okay, to this high, you can see we flushed, okay, right? And we just capitulated into another leg down, right? And a complete break of structure, right? A break of this structure here where we were just consolidating, right? We were consolidating into this small retracement, and ultimately we flushed the low, capitulated further. And you'll remember from the last video that I had got into, and it was where we were last ranging sort of 2024 into 2020, into late 2024 was this, right, where we were consolidating, okay, we were building this base, right? And we've just essentially returned back to this previous range, right? This was months and months of consolidation. Okay, so this was always going to be a very obvious place of support, shall we say. Now what we have here right now is, yes, we capitulated from this low, we broke structure, we flushed it, but then this low, and this is where it's quite interesting, right? We've had the initial retracement, okay, in this downtrend and structure, right? This is downtrend and structure. We've had this retracement, okay, into this sell side imbalance, buy side inefficiency, which is ultimately just a bearish fair value gap. Okay, we're on the weekly time frame, and we've had that point of rejection, which is there, okay, which we'd expect, right? That's around the 50% level, the midpoint level of the bearish fair value gap. Okay, you can also see that we rejected from where you'd expect resistance to be, right, where we previously had this 3 drives lower over here. So we rejected from resistance. This was obviously going to be a very important point of interest, whether we were going to continue climbing or, you know, possible rejection. And we had that rejection. Now what we did was we flushed this low, okay, right? We had this sort of liquidity sweep on this low, which you can see there, right? Initial bounce. Again, we went and swept both of these lows, right? We can say they are equal lows now. Swept both, and we've had this sort of little mini bounce again, and we're now just consolidating, okay? Just there, right? But ultimately what we're doing is we're holding the lows right now, okay? We're holding the lows and we're creating this, right? A little bit of a range and structure right now. So it's sort of, when you combine that, this was pretty evident that it was going to be a point of interest, right, for us to trade back to, right? Previous monthly range of consolidation, which is over here. We're now arranging again, okay, around that point of interest, and we're holding the lows, right? So I'd be very interested. I would love to see another flush. Do I think that's going to happen? Possibly not, right? We're holding this structure right now, okay? We've not had a significant closure, right? Not like we had the flush on the low over here and then we capitulated and it was a super significant closure below, right? And then it was just simply a retracement of this leg down, right? We now had this sort of leg down and ultimately just a liquidity sweep, and now we're holding the lows, okay? And I think, you know, I think a lot of people who, you know, not necessarily traders, swing traders, or, you know, day traders, or anyone who's sort of looking for best bang for their buck, I think now is, you know, people who dollar cost average, I think now is just a great opportunity overall to just continue to dollar cost average into Bitcoin. And we know that seasonality always kicks in during the summer months for Bitcoin. That's why we've got super duper boring price action right now. That's why we continue to consolidate. We had exactly the same during the range in the summer over here. Okay, July, August, September. You can see, what did we do? We began to climb into the Q4 months, right? October, November, okay, December. And that's been the sort of the expectation all along, is that we're going to get this Q4, I expect, move up. And right now, if we're holding the lows, okay, and we're sort of holding this previous range that we had here, right, it's significant structure, okay? And I think if we continue to just consolidate, okay, as I said, this is weekly time frame, and we continue to consolidate, you know, into the September, October, November months, I think we do begin to have the climb sort of up, you know, into maybe December, November, December onwards, right? And obviously there's the whole 4-year cycle theory, which aligns with ultimately seasonality with Bitcoin and risk markets anyway. And you have to think there's also midterms, which is this year. So there's a lot of obviously things to consider price action wise, you know, what could possibly move risk markets anyway. But I do think, you know, you consider usual 4-year cycle theory and seasonality. I think we are gearing up for possibly some sort of squeeze and move up as soon as we head into Q4. Okay. And, you know, this downtrending structure is not going to last forever, right? Just, you know, ultimately bull markets last longer than bear markets. It's just as simple as that. And I think a lot of people are starting to feel the pain again in Bitcoin right now, because we're not really doing anything. We've spent months just, you know, this real tight consolidation between 67 and ultimately 57k, right? And we just continue to consolidate, and we're going to break to one side eventually, right? And I think if we do get a flush, and sort of do get a flush on this August 2024 low, which is a point of interest I mentioned in the last video, I'd love to see that. Okay, right? That's the 2024 yearly. Is that the 2024 yearly low? No, it's not the 2024 yearly low, but it is a significant low from obviously this range right here. So I would personally love to see that low being taken out. And I think just ultimately anything below 60,000 is a instant bid anyway, right? You can see we didn't spend long underneath 60,000, right? We touched 60,000 over here. Okay, we touched 60,000 over here. Okay, so ultimately sort of 2, 3, 4 weeks, right? Okay, and even then, it's not really weeks. Yes, the weekly candles, but we didn't spend a lot of time. Ultimately, when you think this is from the start of the year of 2026, we've not spent a lot of time underneath 60,000. Okay. Now I do think we are seeing obviously some weakness right now and getting this possible bid up. I would, as I said, like to see another flush on the lows that have been building up here. Obviously, a flush on this would be absolutely fantastic. I think if we do head towards sort of low 50s to high 40s, I think that's just an absolutely fantastic opportunity. We are, I think, we are around 50% drawdown from the all-time high. We've been as low as 54%. Typical bear market, Bitcoin, obviously it's diminishing sort of, I'd say diminishing bear markets anyway, since obviously the creation of Bitcoin, as it becomes a more significant market and significant asset, as opposed to, when it was obviously, sort of tiny market cap and then emerging asset. So I think, again, we're going to see diminishing returns to the downside, and ultimately, yes, we may retrace sort of to 60%. I think the last bear market was 77%. So yeah, we're not going to fall that far. Okay, you're talking 30s at that point, and I think ultimately really a 50% drawdown from the all-time high right now. I think it's just a great opportunity just overall. There is, if we're looking at it from a trend following point of view, let me get rid of those drawings. Okay, if we're looking at it purely from a trend following point of view, and this is sort of another good technical I guess viewpoint to have, or point of view to have, is whenever we trend below the 200 week simple moving average, and this is just long term trend following. Okay, you'd use the 200 SMA for the likes of the S&P, for the likes of the Nasdaq, anything that has a long significant historical data, because ultimately these are growth assets. Okay, and they'll continue to be growth assets as long as we, as my beliefs, we as a human race continue to innovate and continue to sort of advance as a race. And if we trade below the 200 week SMA, that's usually a good time to buy. And you can see we did that here, we're now underneath it again. Could be an opportunity to buy. You can see last bear market, okay, obviously bear market starts a lot sooner. But when you get sort of those confirmations of, well, this might actually be a really discounted entry right now, it's when we begin to trade below the 200 week SMA, and you can see we did that in 2022, 2023, right? And it was an absolutely fantastic opportunity to buy. This was probably one of the most significant times of my personal investing and trading journal, because that was kind of like when I was all in, sort of in both crypto and just in traditional markets. And I think the likes of Bitcoin has given us that possible opportunity again to really enjoy sort of the risk to reward that we've got possibly here. And yes, I would like many months, possibly 9 months of trading below it. Absolutely fantastic opportunity, and just ranging and consolidation. Do I think we're going to get that? No, probably not. Doesn't have to work like that every single time. You can see we didn't spend too long underneath it there, but again, that was a great opportunity to buy. You can obviously move to the daily and look at the 200-day SMA. Again, it's sort of a similar kind of thing. Obviously, bear market started a lot sooner. You had the rejection of the 200-day SMA there, which is confirmation. And if you just spent the whole time, dollar cost averaging, then you really began to sort of increase the weight on that dollar cost averaging you was running with, then those returns to the upside are just absolutely fantastic. And you should never really stop dollar cost averaging in risk markets and growth assets, a bit like Bitcoin and obviously the S&P and growth stocks and all this type of stuff, because at the end of the day, it's as a race we continue to sort of have this technological exponential growth in a lot of different technologies, and of course AI is that at the moment. And I think people obviously are a little bit fed up with Bitcoin and crypto at the moment, but bear markets bring opportunities, and bull markets are great to sort of dollar cost averaging when you have that confirmation in a growth cycle anyway. But the real juicy risk to reward is when things are looking really, really bad, and that's what we have ultimately in crypto and Bitcoin at the moment anyway. And I think that's ultimately what we're having right now. Okay. I won't waffle on any longer, because I think that will do for now, unless let's move very quickly, shall we, to the higher time frames and look to align our high time frame bias first, I guess. So probably one thing to actually consider here, purely high time frame bias right now, might have to get rid of those drones completely. Okay, now you can see there is, right, you can see the sweep of the monthly candle here, right? Okay, and what we can do is we can draw that monthly high there. Okay, what are we doing? We're just ranging, right? Ranging in this monthly candle. Obviously we had the sweep on this low, which is over here. This monthly candle is obviously pretty important. You'd want to go close this month. If you get a close above previous month high, which is here, right, then you're pretty much looking towards higher prices. Okay, it's just as simple as that. Right, let me flip that round and turn that to, okay, and you can see we are actually holding the equilibrium of previous month range. Okay, right, so in my opinion, not all is lost. Ultimately, I would definitely be looking for a closure above the equilibrium of previous month candle and a closure above previous month high. Okay, that's what you want to see for continuation higher, right? Possibly targeting the high over here. Okay, we may just retrace into this gap towards 72,000. Right, obviously this will be a bearish monthly fair value gap, right? Bearish sell side imbalance, buy side inefficiency, just like we traded into the bearish gap over here, right? Bearish fair value gap, and then what did we do? We had continuation lower. But for now it looks fine. That's what you kind of want to be looking for with possible sort of continuation higher, right? You got the sweep on the low, which is over there, okay, on this, right, on this this monthly candle, and then you now hold an equilibrium level, right, which is exactly what you want to see. I wonder if there is it 3 month? Okay, so similar kind of thing, 3 month time frame. You can see we swept the previous 3 month candle there, which we're obviously holding. Obviously 6 months is going to be the same, so we've swept the previous 6 month candle there. Okay, exactly what you want to see. You want to see us hold that now. And you kind of got to think here where you swept the previous 6 month candle here, right? What did you have? Closure below, continuation lower, right? So you want to sweep the low, hold it, and then you want possibly continuation higher. Okay, and that's ultimately, these are the things for us to sort of align higher time frame bias. And And again, something I mentioned in the previous video is this is why we look at higher time frame bias. Let's have a look how that looks. Okay, so we're just using logarithmic because we're on the monthly candles now. You can probably see, right, you can see 1, 2, 3, right, uptrending candles. This is the yearly time frame, so these are yearly candles. What did we do? Okay, we retraced, right, so 3-year bull market, 2019, 2020, 2021, 2022, we retraced. Okay, you usually have, right, we had the 2018 retrace, 3 candles up. We retraced into the gap, which is here, okay, because you had this sort of gap up in this candle, okay, in the 2020 candle. So you begin to retrace into that gap, right? That's ultimately a bullish fair value gap on the yearly time frame. And then you have 1, 2 candles up, you gap, okay, you gap up, you break this candle high, this yearly candle high, and then what you do, you begin to retrace into that gap, okay. So ultimately we're looking for this to hold, and that's why I said low 40s, 45,000 really is what we're looking at as a sort of minimum, right? The likelihood for that to hit is still very unlikely, but we are trading them within that gap now. And if you think, okay, well, you take what happened here, right, and just typical price action and high time frame bias sort of viewpoint to all of this is possibly under 74,000 towards 45,000 is a great opportunity for dollar cost average, right? And ultimately what we would want to see is we'd want to continue trading in this, which we have been doing, and then we'd want to have a gap up, okay, and begin, that next sort of bull cycle for Bitcoin. Because at the end of the day, I don't think Bitcoin is over as a growth asset. It's this is just how cycles and markets work, and Bitcoin's having that moment where it's just ultimately just retracing. It's in a drawdown period, and drawdown periods don't last forever. Bull markets and these growth periods last much longer than the alternative. And yeah, as I said, I think now is it just remains a great opportunity to dollar cost average. And as I said, between 74,000, 45,000, if you wanted to use that as a level to just dollar cost average, what you can just do is just draw this gap, right? As I said, this is purely high time frame bias. This is what I've always used if I've wanted to look at something from a purely risk to reward point of view. And once you're in this gap and you're trading in this gap, which we have been doing, you just want to see a sweep, which we've got right there, okay? We've got the sweep on previous 6-month low, and same with the 3-month low. So we just want to see continuation now, and is this a possible reversal point, okay? Or should I say early signs of reversal, right? Got the high time frame key level, right? The big level. There's lots of reasons why it's a big level. We've gone through all that from a lower time frame and high time frame. So you want to see this low hold, right? And we continue to close above, okay? Right, I'm going to end that there. Cheers. Thank you for listening.